Next is cess and surcharge. Okay, both are something like tax only. Okay, it is added to income or it's added to the goods and service that you consume. It is like a tax, but some little bit change, a little bit difference is over here. Before we go into that, there are three types of funds. Yes, Consolidated Fund of India, Contingency Fund of India, and Public Account of India. So these are the three types of funds that are there in India. It can be with the state also, Consolidated Fund of State. Leave that. So in the constitution or statutorily they are provided. Leave that. That's for the polity part. So Consolidated Fund of India, basically all the money that the government receives, all the money the government receives is put under this Consolidated Fund of India. Agreed? So all expenditures also comes from Consolidated Fund of India. It is kept under the Parliament control. Yes, who is the custodian of Consolidated Fund of India? Parliament. So without Parliament's approval, no money can be deposited, no money can be spent from Consolidated Fund of India. Okay. So that is one thing. So what happens is, with respect to tax, whatever money that is collected from the tax as part of tax goes to the Consolidated Fund of India. And it can be used only with the approval of Parliament. But cess is not like that. So cess is collected for a particular purpose. Though when you collect cess, it goes to the Consolidated Fund of India, but that it is immediately transferred to another fund from which that money is used for that particular purpose itself. It goes to a public account fund. It can be named differently, but it goes to a public account fund, this one. So who will keep this public account fund? It is under whose control? It is under the control of the executive. Whose contingency fund is under whose control? President, correct? You know that. This is under the control of the president. This is under the control of Parliament. This is under the control of the executive. Executive can be anybody. It can be like Ministry of Finance. It can be Health Ministry. So, whatever cess that is collected in the health is kept in a fund, which is kept under the disposal of Ministry of Health and Family Welfare. Anyways, we'll come to that. So this public account is kept under the control of executive. It can be anybody, like a Provident Fund, Department of Provident Fund, whatever that is there, like that. Okay, or it can be under the Ministry of Women and Child Welfare Ministry. If it is that, see, what is this public account? Just to recap your polity, whose money it is? See, Consolidated Fund of India is public money. Everybody, the citizens of this country contribute. That money goes to the Consolidated Fund. Contingency for emergency purpose. Public account is beneficiaries, correct? Example, beneficiaries who are depositing money with the government. That money is generally kept in public account. So like that Sukanya Samriddhi Yojana scheme, yesterday I showed you, no? So the money that is collected by the government under that scheme is kept under public account. National Savings Certificate, you go and deposit money in post office. National Savings Certificate. That money is kept under public account. Why? Because tomorrow when you want it back, when the beneficiaries want it back, the executive will give it immediately. They don't have to ask whom? Parliament. Parliament approval is not required because it is not public's money which is kept in. It is a beneficiary's money. So when the beneficiary wants it, they have to give it. Understood, all of you? So that is why it is kept under the respective ministries or department. Okay, so whenever they want it, they have to give it. They have no other choice. Here it's not like that. When money has to be used from Consolidated Fund of India, they have to take the permission of Parliament. Same way, even this cess is not kept in Consolidated Fund of India. It is kept outside the consol. It goes to consolidated. From there, it goes to another type of fund. And it is kept under whom now? It is kept under the executive, and they can use it whenever they want. Okay, so that is one thing that you have understood. Okay, that is one thing that you have understood. Then one more thing is that cess is for a particular purpose. Surcharge is addition tax, but levied on individuals who are rich, but it can be used for any purpose. Cess is additional tax levied on goods and services or on income, and the proceeds of which should be used for only a particular purpose. That's the difference between cess, surcharge, and taxes. So cess is additional tax in order to raise fund for predetermined purpose. It cannot be spent for other purpose. Like motor vehicle, if they add cess, additional cess can be levied. Okay, so anything, it can be income tax for everything. So cess tax to raise fund for predetermined purpose cannot be spent for other purpose. Whereas surcharge is additional tax or fee or other charges levied. Okay, charges on already existing tax, it is spent for any other purpose. Any other purpose. Now, these are the examples. Okay, you don't have to remember these as such. Okay, so Swachh Bharat cess was earlier levied on services. So whenever you paid service tax, in addition to that service tax, you had to pay 0.5% Swachh Bharat cess. I don't know if you remember before GST, when you used to pay service tax. So service tax plus Swachh Bharat cess used to be there, remember? Okay, so that is what is this. Today, we have 4% health and education cess on the income tax. Huh? Yeah. All that is, I mean, I just gave examples, that's all. More cess. You have coal cess and things like that, all that is there. So just to give you an example. Why these two examples, let me tell you. So, cess can either be on the tax or it can be on its value. I'll repeat. The cess can be levied on the value of the product, or it can be on the tax. Okay, what do you mean by this is, let's say 100 rupees is the value. Okay, tax is 10%. So how much is the tax? 10 rupees, correct? Tax is 10 rupees. So totally it comes up to 110. Now let's say cess is 10%. Let's say cess is 10%. So it can be tax value of product. Cess can be on the value of product. So if it is value on the value of product, how much is it? 10 rupees. So how much it is now? 120 rupees. Totally 10 rupees tax, 10 rupees cess, 100 rupees value, totally 120 rupees. Or it can be, cess can be on the tax. So if it is on the tax, 10% means 1 rupee. So how much is it now? 100. Did you understand? So it can be tax on tax or it can be tax on value. Okay. So that's what it is. So here Swachh Bharat Abhiyan was on value. Health and education cess is on tax. Okay. Understood? So 4% health and education cess on the income tax. Swachh Bharat cess is on the value of service. Is on the value of service. Understood? Yes, all of you. So some books mention that it is tax on tax only. It's not like that. Okay, so those books are wrong. So it can be tax on tax or it can be tax on value. So don't go by that definition. So those are wrong. Okay, so when you read in some books, it may be wrong like that. So basically, cess means what? It is an additional tax only, but for the purpose of a specific, for a particular reason. That is cess. Then why surcharge? Surcharge also is a tax, just that the government is little greedy. It wants more money. It sees a rich person, they'll say, oh, come, you pay more tax, I will levy surcharge on you. So surcharge is on rich people generally, or rich companies. That is a surcharge. So surcharge, see, for example, somebody who is rich and has more than 50 lakh income, 50 lakh to 1 crore, they'll say, hey, you have too much money, I will charge you 10% surcharge. Somebody's income is more than 1 crore, like 15% surcharge. Okay, on the tax. Okay, 10% on the tax, 15% on the tax. Usually surcharge is on the tax. Tax on tax. Surcharge is not on the value. Okay. Companies also, if they are earning a net income is more than 1 crore to 10 crore, if it is a domestic company, they have to pay 7%. If it is a foreign company, they have to pay 2% surcharge. Numbers are not important. Okay. It keeps changing. Nobody will ask in the exam. But idea is important. Okay. So with that, let's see the difference between the cess and surcharge. So cess can be tax on tax or on the value, whereas surcharge is usually tax on tax, additional fees or levy in addition to the regular tax, and it is calculated on the tax. So surcharge is 10% means, surcharge is 10% means, so tax is 10 rupees. Okay, let's say 10% tax. So here it is 10 rupees is the tax. So 10% of 10 rupees, that is surcharge to every taxpayer, whereas surcharge is only when the income exceeds certain amount. Cess is for everybody. Okay. Used for specific object only. Objective only. It cannot be spent for other purpose. Whereas surcharge, it goes to what? Consolidated Fund of India and can be spent for any purpose. Then same rate for everybody. Rate will vary. You saw, no? 50 to 1 crore, 1 crore to above, like that. It varies. Then another important reason why central government chooses cess and surcharge over increasing the tax. It will not increase tax, but it will add cess. Because tax means they have to share it with state. Cess surcharge, they don't have to share it with states. Okay, so why union government, or rather the government levies these cess? So one is easy to introduce. See, unlike taxes which requires amendments, okay, cess can be introduced by a government notification. Easy to introduce, modify it, and even abolish it. It can be introduced by a notification. It does not require a law. It need not share it with states. It is used for a specific purpose. So it will promote welfare. Now health, education. That money is there. It cannot be used for anything else. Government will have to use it for education, have to use it for clean energy, have to use it for Swachh Bharat, like that. It cannot use it for any other purpose. Okay. And lastly, can be carried to the next year. That means it is non-lapsable. Very important. I forgot to mention it earlier. It is non-lapsable. Cess is non-lapsable. So what happens is, whenever a money is sanctioned, so in Consolidated Fund of India, what happens? Budget, okay, approves what money has to be used from the Consolidated Fund of India. Yes? Okay. That budget is not, what is budget? Budget is nothing but demand for grants. Meaning government is asking money from the parliament that I need this much money for these purpose. that is approved in the budget. But the budget validity is only 1 financial year. If the money is not used in that financial year, the money goes back to the consolidated fund of India. Let's say in the budget, 100 crore is sanctioned for education. If the government does not spend 100 crore, it spends only 90 crore, there is 10 crore balance. That will not go to the next year. It will go back to the consolidated fund of India. Next year, again, it has to get approved. Whereas Cess is not like that, because they have created a separate fund where the money is deposited. That fund will not lapse. It will continue until it is required. Okay, so can be carried to the next year unspent. So what happens is it will in a way bring efficiency. If it has to be spent in 1 year, what will happen? At the end of the financial year, towards the end of the financial year, government will rush to spend that money. Whichever expenditure it can justify, it will go on spending. You might have heard of this word called as March rush. So March end May, everybody has to start spending. February, everybody road, they will break down, start building new road, things like that they will start doing because they want to spend that money. Okay, but in Cess, it doesn't happen. They can plan properly, spend it accordingly. Okay, so that's the advantage of Cess. So this last year you might have read in current affairs, right? So to use the Cess collected from health Cess, the government has created a fund called as Pradhan Mantri Swasthya Suraksha Nidhi. This is what I was trying to recollect that time. Okay, so Pradhan Mantri Swasthya Suraksha Nidhi. So basically, it is a fund which is created out of the Cess collected on health Cess, which we collect, no income tax. Okay, you have to pay health Cess. So that money is put into this fund. This fund is called as Swasthya Suraksha Nidhi. Nidhi is fund. Okay, so it is a single non-lapsable reserve fund for health. Where is it? In public account. From where did it come? From the proceeds of health and education cess levied on income tax. So that money is under which? It's under executive. Who is that executive? Minister of Health and Family. That's why I told you it's so you should be very clear. Right? Consolidated fund, Parliament. Contingency fund, President. Public account, the respective ministry, executive. So here it is under the Ministry of Health and Family Welfare. So example is Ayushman Bharat scheme, National Health Mission scheme, or health emergency, or pension. I mean, Pradhan Mantri Suraksha Yojana insurance scheme. It can be used. So vaccination, COVID vaccine, etc., are funded, can be funded from this. As simple as that. See, current affairs should be related. When they ask there, you should, when we read current affairs, if you don't link it with the concepts, you tend to, neglect certain important part. Like you would have read Pradhan Mantri Swasthya Suraksha, you will not focus on public account. So suddenly they'll ask, all the money collected from this one is kept under Consolidated Fund of India. If you are not paying attention, you might get confused. So things like that